Welcome to this special discussion on the Africa Pulse Report 2025, the World Bank's flagship analysis of economic trends and policy challenges across Sub-Saharan Africa. This year's report comes at a critical time as the region seeks to consolidate its recovery while facing persistent structural and macroeconomic headwinds. To discuss the key findings of the report, I am joined by Andrew Dabalen, Africa Region Chief Economist at the World Bank Group and a key contributor to the report. Thank you very much for accepting the invitation.
It's a pleasure to be here.
Can you first give us an overview about the Africa Pulse report, how it all started from the beginning, and what are the key findings that we find about this report?
Fantastic. So the Africa Pulse is a biannual. We produce this twice a year, once in April and once in October. And this is now the 31st edition, I believe. I have long lost count. And one of the things that we do usually is to look at the near-term macroeconomic outlook for Sub-Saharan Africa. So we look at things like inflation, debt dynamics, growth dynamics, public finances, and so on, right? So this high-frequency macroeconomic data. And then in the meantime, at the second part of the report always contains a special section which is more structural issues that concern the subcontinent, right? So that's the objective of the Africa Pulse. And in most cases, this is really geared towards policymakers in the region, right? So that they can get a sense of what's going on in the region, but also some of the important structural issues that requires policy attention. Now, this year, what we see is that there's a recovery in growth. So the region is expected to grow about 3.5% this year, and we forecast that that will accelerate to about 4.2, 4.3% next year and the year after that, in the next 2 years. Now, what we're showing is that is now approaching what the rate at which the region has been growing at the first 20 years of this century, right? From between about 2000 to 2019, the region was growing about 4.5%. Having said that, though, the region is growing at different speeds. So there are some big economies, so South Africa, for example, and Nigeria, which are growing at much lower rates than that. And so because of that, because they are such big economies, they actually pull down the average. If you just separate Nigeria, South Africa, and maybe Angola, which is also a big economy in the sub-region, the rest of the subcontinent is actually growing at something close to 5.5, 5.6%. And this is mostly driven by, economies in the West African Economic Monetary Union, so Cote d'Ivoire, Senegal, Benin, Togo, for example, and the Eastern African clusters of countries, Ethiopia, Kenya, Tanzania, Uganda, and Rwanda, right? So those are that's where the main areas of faster growth are taking place.
Right. Many African countries face debt issues, and we want to talk about debt sustainability and financing constraints. The report warns about rising debt service costs and limited fiscal space in many countries. Could you elaborate on the nature of the debt risks? Are they mostly external, domestic, public versus private, and how are countries managing these constraints while trying to maintain critical investment in infrastructure and human capital?
Yes, so debt is a really, really big issue in the region. So there have been a debt boom, we could call it that, since about 2012 in Africa, right? The levels of debt have risen rapidly. Now, at the moment, what we see is that maybe about 60% almost half of the countries have debt to GDP ratios that are almost 60%. Right, so that's the median. It's the median debt to GDP ratio is about 60%. The 75th percentile, the most indebted, right? The more higher indebted countries have something like 75% of their GDP, share of debt to GDP, and the lowest, the least indebted, let's say the last quartile, right, 25th percentile, is still about 50%. Debt to GDP ratio, right? So there's a lot of indebtedness. So, and a lot of countries, there's not a single country in the sub-region that it will be considered low risk of debt distress, right? There are a few that are moderate, and then a whole lot that are either in debt distress or high risk of debt distress. So the levels of debt are therefore quite onerous. Now, what that does, of course, is to make development challenging, public investments in particular. So it reduces fiscal space for these countries. They can't spend what they really would like to spend or what they should be spending on core development issues like health, education, infrastructure such as roads that they and power generation that they desperately need. So there is a real urgency in trying to be able to do debt management and make sure that at least these debt levels come down substantially so as to be able to free up fiscal space for these countries to do core development that's geared towards transforming the structures of this economy and to create jobs.
Are there any debt recommendations to deal with this issue in the report? What would be the key recommendations for the countries to do so?
Yeah, so one of the we've been trying to monitor these debt levels and these debt dynamics for quite a while in several of these reports because it is such an important feature of the economies, and so we have over time made certain recommendations. So one of the things that we've been recommending is, first of all, to be able to have a lot of to be able to actually commit to the global framework for debt resolution, right? The G20 global framework, but to make that work better, because right now it is too slow. It doesn't really resolve the debt as fairly as these countries would like to have. And so in the World Bank, what we've been recommending is that maybe we should commit to much faster, much fairer, and more meaningful debt resolution under the G20 common framework. In addition, of course, what we recommend is that these countries need to spend a lot of time making sure that their debt accumulation is very transparent, right? There's a lot of non-transparency in terms of debt that is being held by these public agencies, right? Now, so that's one thing they could do. The other thing, of course, they can do is to be able to really begin to think very carefully how to spend better. So expenditure efficiency is very important, but also how to think about mobilizing more domestic resources in order to be able to give themselves some not only to manage their debt and to pay off some of this expensive debt, but to be able to create resources for investments.
All right. My third question is going to be on inflation dynamics and exchange rates. Inflation has been a persistent concern in many African economies, fueled by supply chain disruptions, currency depreciation, and many global shocks that the continent has faced recently. According to the reports, are inflationary pressures easing in 2025?
Yes. So this is one of the success stories in Africa. In fact, one of the reasons why we see this recovery in growth is in large part because inflation has come under control. That has allowed consumption to recover. So household budgets are recovering slowly, and maybe even some investment recovery because the price levels have stabilized. What we notice is that at the peak, about a couple of years ago, maybe 2022, median inflation was about 9% in Africa, in Sub-Saharan Africa. It's now down to less than 5%. So 7 out of 10 countries have now been able to bring inflation under control, and this inflation is within the bands that the central bankers in these countries feel like they are within, in comfortable bands that they usually will monitor. There's still a few countries, 3 out of 10 or so, where inflation is still very high in double digits. And these are some of the big economies like Nigeria and Ethiopia and Ghana and so on. So that's where the battle has not yet been won. But in many other places, inflation has come down, primarily because global inflation has actually come down, right? Because usually what happens is that for a lot of these countries, there are huge supply shocks and spillover shocks that come from what's happening outside of this continent, right? So in general, when, for example, there's global inflation in places like the US or Europe, and the interest rates get raised, then what happens is that there's a lot of capital flight out of Sub-Saharan Africa to these safe places where interest rates will be higher in order to be able to control inflation. So what that does is to depreciate these currencies, as you point out, and the depreciation of currencies then puts a lot of pressure on like import costs and so on, right? So it leads to high levels of import costs, and that is part of the dynamics of inflation domestically for these countries. Now, fortunately, because inflation has come down and the interest rates have either stabilized or come down in some places in outside of the continent, the currencies have also stabilized. The second place where this there's been success is because the agricultural production has actually recovered. So a lot of the inflation is typically food, whether imported or because of domestic supply shocks, and fuel. So fuel prices, fossil fuel prices have stabilized, and so have food prices after the shock because of the war in Ukraine. So a combination of what's happening domestically, what's happening globally has led to these lower levels, easing of inflation.
Perfect. The report emphasizes the importance of structural reforms for long-term resilience. In your analysis, which specific reforms, whether in digital infrastructure, regional trade integration, energy transition, or institutional governance, hold the greatest promise for boosting competitiveness and diversifying the growth in the continent?
Yeah, so structural reforms are really key. They're very, very important. Given the context in which these countries find themselves, right? High levels of debt, high levels of trade uncertainty, and possibly very high levels of cost of borrowing in order to be able to finance their development. It's going to be very important. It's imperative that they do a lot of structural reforms that will generate growth. Now, one might ask, how can they do that in the context of all these problems, all these challenges? Now, I think, there's still a lot of space, despite whatever is happening outside the continent, right? Domestic reforms are always going to be dominant in the way in which a country's trajectory of growth actually happens, trajectory of development. So there are specific things that these countries can do. So, for example, even while there is a fiscal space constraints, they have choices over what to spend that money on, whatever they have to spend money on, to prioritize specific spending and investments that will protect long-term growth, but also the poor population, right? And reduce a whole lot of others that may be mostly driven as consumption, and may not actually harm, even if you reduce them, may not harm long-term growth and long-term capital accumulation. So it's really important for these countries to continue to reform education and invest in education reforms and healthcare invest in the people, because that will be important long-term. We think that there is scope for investing in infrastructure, specifically things like roads and energy. Energy is so important for competitiveness of firms. But there are other things where it doesn't require money. So things like increasing competitiveness of markets, right? Just removing all kinds of obstacles to trade.
Administrative barriers.
Exactly, right? Non-tariff barriers, for example, right? Or even just improve the efficiency of your ports. And so there are key reforms structurally that can be done, even in terms of just fiscal policy that can be done in order to be able to unlock competitiveness, productivity growth, in order to be able to really jumpstart growth, because that's what's really key. That's what's really desperately needed. You need growth levels to be much higher than what they are now in order to be able to create economy-wide productivity growth and also jobs. So that's really the key. I would say the key victory will come when that happens.
Thank you very much for those clear insights about growth composition, inflation, economic competitiveness for Sub-Saharan Africa. Dabalen, it was a pleasure to have you with us on this special broadcast.
Thank you so much.
Thank you very much, dear audience, for following us in this special broadcast, and see you soon.